Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, September 28th. Firstly to the US dollar index, and here we see a technical change of trend today. This current candle forming a higher high and a higher low. Not a lot of interesting activity here once again. Another small body candle that we've seen over the last week or so. Very small body candle trading, showing a real lack of interest in the FX markets at the moment. Importantly, the market attempting to trade out through the top of the Ichimoku cloud once again and finding resistance at the Candlestick indicator and being strongly rejected from there, closing just slightly below the bottom of the Ichimoku cloud. I certainly wouldn't be suggesting that we have a long-term bearish market with this close below. It has been through a flat part of the cloud and we can often have false breakouts. Having said that, however, we do see a continuation of this negativity and the change of trend to the downside, and 95.23 and the Kijun-sen trading in that region taken out in a strongly bearish manner, then we certainly could see the market end up trading down to this 94.29 half level of support. By the same token, if we see a strong bullish breakout above the Tenkan-sen and 95.85 taken out in a bullish manner, we could end up testing up to 96.31.5. But at the moment, a fairly neutral market caught by resistance at the Tenkan-sen overhead and around the Kijun-sen and the bottom of the Ichimoku cloud beneath where we're trading at the moment. And just looking at the bands here with the US dollar index futures, and here we see the market trading within the bands and suggesting a neutral market in big picture terms. The bands are starting to squeeze, so that suggests that we need to be prepared for some trending activity soon. When it happens, we don't know, but we have to be ready for the breakout. Importantly, the market once again testing above that upper band and being rejected from there, as we've seen for 5 of the past 6 consecutive days. So the market unable to close up above there. This suggests that there is just some slight weakness, some stronger activity from the sellers, just slightly. So monitoring the lower band at 95.07.5 for potential breakout to the downside, or the upper band at 95.71.5 for an upside breakout. Now to the US dollar index futures on the hourly charts, and here we saw the market trading above each of the Ichimoku indicators at various times throughout the day. For most of the trading day, we were trading above the Ichimoku cloud with a bullish market in the longer term time frame. We did test to the first pivot point resistance level, sold off from there, found support at the top of the cloud and at the middle pivot point level, attempted to break out with a lack of follow through and then retrace back towards equilibrium around the Ichimoku cloud. At the moment, the cloud is very thin. There is an opportunity here for the market to trade out down to the downside, giving us a bearish market in all 3 time frames. In line with that breakout would be in line with the market being bearish in the fast term and medium term time frames by trading below both the Kijun-sen and the Tenkan-sen. So an opportunity here for the sellers if they are strong enough. The first pivot point support level could come into play down around 95.17. Possibly down to the second around the 95.04 region. If the market does rally, and at the moment in this current hourly candle, we are seeing the market test above the Ichimoku cloud, looking to potential resistance at the middle pivot point level, 95.41, and then at the Tenkan-sen trading at 95.47. Next to the Euro US dollar, and Euro US dollar has been trading above the Ichimoku cloud for the last few days, and today finding support within the cloud. Not an interesting market at the moment, caught between resistance at the Kijun-sen around 112.31 and support below the Tenkan-sen around the 112 area. Today we've seen a formation of a doji candle in a downtrend. It suggests a lot of indecision in this market. It suggests that the trend to the downside is not terribly strong, and suggests that there is potential for a change of trend to the upside. Now, that would mean for a change of trend to the upside, we would have to break out above the Kijun-sen indicator. And at the moment, this current session is testing to there, and we have seen some rejection from there. So a good test for the buyers here today. What we want to see really would be a strong bullish breakout with strong follow through if we are going to see the market trade to higher levels, possibly up to 113.18. But at the moment, there isn't any solid sign that we will see any strong trading activity in either direction at the moment. Moving next to the US dollar, Japanese yen, and the second last candle on the chart here is the one that we're analysing, and the last candle is a candle that is currently trading, and we're seeing some bullishness coming into the market. Today we've seen the buyers in control with this second last candle here closing up towards a high, suggesting there was potential for the market to trade to higher levels. We did trade through the previous resistance level from the yesterday at 100.59, but found resistance close to this 100.85 level. The size of the white body here is larger than the previous day, suggesting a build of momentum, and we have seen that strong follow through here today in this new session. This new session has seen resistance at 100.85 taken out. We are now interacting with the 101.40 level, previous support level and resistance level, but with the Tenkan 10 trading there, the buyers are going to have to be very, very solid if they can trade through there. If we do trade through there in a bullish manner, we could end up trading up through to the top of the cloud around 102.12 region.